Good evening and welcome to the Accendo Strategy Group. This is our stock market wrap-up for Tuesday, November 17th, 2009. Our website is blog.accendotrader.com, where we put together video, technical analysis, trading plans on a daily basis. And we work on our trading plans to allow us to stay focused and disciplined. It allows us to see what's coming down the pipe that can affect our trades, and we want to make adjustments. And more importantly, by being disciplined and focused, we're able to cut our time down, preparation time, and spend time with our family. So today, the day that was, really wasn't anything. I mean, those of you who've been watching them, we normally have, more to say, but there really wasn't much to say. The dollar rebounded, which allowed the market to kind of pause and take advantage of the two up days that we had here, specifically yesterday. And we also had some economic data that was kind of mixed. So we have most of our major sectors end up positive. We had some good corporate news, but again, corporate news, economic data, whatever it is not really moving the market. The dollar is. So overall, we had a blah day. Home Depot beat expectations, Target beat expectations, Saks beat expectations. Interesting, an upgrade on STT. That's a bank, and the banks have been doing not too well recently, but it's been upgraded. And here's something else interesting. We had a downgrade on Apple and Amazon. Really, not necessarily a price target downgrade as much as lowering it from a strong buy just a buy. So there's still a buy, but not as strong as before. But, overall, today was a blah day. Tomorrow, we have housing starts, building starts. In the past, had market movement potential. Who knows what's going on in this market? No real earnings to really move the market. And we have the same splits calendar. So let's go ahead and look at the chart and we'll see what we see. Okay, the first thing I want to do to kind of give a summary of the day is share a website that I look at from time to time. A good friend of mine, Lydia, shared it with me, and it's finviz.com. You obviously can see the website over here. And what I like about it is it does auto refresh. So those of you who are at work or whatever who want to check out the market, or are part-time traders, here's a good website for you to pull up, and these candles kind of refresh as we go throughout the day. But it also has a really good picture. Obviously green is up and red is down, and yellow is basically to the side, so you can get an idea looking at this hodgepodge of a quilt of all the stocks. You can kind of get to that today. Was a mixed day. On up days, this would be all green. Down days, it's all red. Some good information over here. They also have some screeners down here with some, and you also can click on the stock and it will take you to their chart. So there's some really good information on this website, FinViz, and this is just a free version. That's all I use it for, but they have paid services for more screening types thing. But the main thing I want to do is, again, just take the quick moment and look at today, and you can see here's our three markets, and what do we see? Yes, we ended up actually have a nice uptrend line here from the lows of the day. Again, double bottom top. Remember we talked about failures? Once we failed to make a new low, kind of took off. Really see it on the NASDAQ, went up, came back, tested the low. Once we failed a new low, we took off. Same thing here on the S&P 500. When we look at the actual specific charts, here we are on the Dow, and we can see, remember what we talked about yesterday, which was this downtrend line from the October 2007 highs and the uptrend from the March, and we kind of broke above it, which is certainly great. And again, with the reaction of the Dow today, we have sort of a consolidation day, still up move though, so that's certainly positive. But again, what's going to concern us? The volume, and we'll take a look at that when we look at our internals. Switching over to the NASDAQ, again, we've been talking about breaking above 2200, and we have broken above that. Even with the gap down, we rallied up. When we look at the terms, we will see that the NASDAQ was the strongest as far as advanced decliners, and the S&P 500. The good news is that we hit lows and we rallied. Still no volume to confirm what's going on here. We'll switch over to the multi-charts, and we can see again we still have this 50 moving average looming out there as resistance. And also, if you take a look over here, back in 2004, we've got this support now acting as resistance in this range right here. Switching over to the NASDAQ, we can see we're still above the 50 moving average, still kind of in a tight range, but we need to break above this level here so that we can get up to about the 2350 range. Finally, with the Dow, again, the 50 moving average is acting as support. Matter of fact, we're basically right there. So some more up move will get us above the 50 moving average, and the Dow's leading us this week, so maybe that will pull the rest of the market up. When we look at the internals, the first thing we see are red numbers for our volume. So of course we had a lighter volume today. Our breadth 0.5 is above 0.5 is bullish, and you can see we're barely above that, so we're not going to get much there. What was interesting was that you can see this down here that we had a higher number on decliners on the NASDAQ, which is why we have a red number here, because on the NYSE we basically were at par. So we did have a negative decline number, which is interesting. So as we're approaching the resistance of Dow and the S&P 500, approaching the 50 moving average, as we are moving on lighter volume, we don't have a catalyst, you have to wonder if this is a sign that we're pausing for a little bit. Are we really broken out of consolidation that the NASDAQ was in? And certainly the downgrades on Apple and Amazon did not help. As we take a quick look at the market intraday, the main thing I want to point out here is this little purple line here is the Woody's pivot. And so I just want to point out that, you know, pivot points, for those people who don't use them, if you're an intraday trader, you got to at least consider having them. I mean, look at this support and look how many times this held up, even before the market opened. And then once the market opened, we came down, touched that, took off. And again, it held as support, and I believe here at this 1120 range, as I scroll over, that was it. Once we hit it that many times, we finally took off and had our failed new lows and went off higher. So just a little quick plug on using your pivot points. And now we're moving to the educational portion of our video. We're using the book Trading the Zone by Mark Douglas, Chapter 7, The Paradox, the Random Outcomes, Consistent Results. We've been talking about the comparison of traders and gamblers and the importance of finding an edge, the importance of having a system in place, a trading plan, that puts you in a situation to succeed. You look to get things aligned in your favor so that when you execute your trade, more than likely you're going to win. You're not going to win every time, but knowing that the ratio, the probabilities that if you execute so many trades, this is going to happen. We're going to have a video come out shortly talking about, you know, how many contracts and how many times you trade a day and the percentage of winning. We're going to talk about that soon. But I know as a realtor, you know, we were told 3%, make 100 calls. You'll get 10 calls back, and you should get 3 of those. You know, obviously in trading, you want much better return on investment. So when we're developing our trading plan and we're using such tools as moving averages and trend lines and oscillators, and those things are equivalent to the rules of the game to gamblers. Basically, we use these tools as known variables to put the odds of success, our edge, in our favor. When we bounce off a moving average and this indicator and these 3, you know, invest tools, 3 green arrows up, 3 red arrows down. When those things happen, you're putting things in your favor, and the probability for success is much greater compared to just following Cousin Vinny's news tip. So remember our live professional trading room. I've been seeing some people coming in there. Make sure you say hi. They got a 10-day trial for $29.09. This is a futures trading room. Alex is an awesome leader. Again, for those people who are coming and joining in, make sure when you join, you put in Civil Traders, but make sure you say hi to me when you're in there. Again, come check us out on our 5 good minutes. You'll see in a second about why you should be trading futures. But if you're going to trade futures, we've got a great relationship. immediate margins as low as $300 per day. That is leverage. And more importantly, when you sign up through us, you get 20 free contracts, 20 free trades. And our free day trading ebook allows you to help you develop your routines, pre-market, during market, after market, help you develop your routines. And we have some other free offers in there also, so take a look at our ebook on our blog. So come join us every Sunday night. We'll help you start your trading week. And again, as I said earlier, 5 good minutes, how to get started trading futures. And come get our podcast or follow us on Twitter to get more information. Thanks, guys. I'll see you tomorrow.